Welcome to the Debt to Financial Freedom podcast. I'm your host, Victor Lagos, and the founder of Lagos Financial. I've been in the finance and lending industry for 16 years, and I've personally made financial mistakes and learned from them. I started this podcast to share stories and lessons on my own journey and to share insights that may help others on their journey. And I interview people that I've connected with that share the same values and mission to help others create financial freedom. My goal with this podcast is to share raw, honest, transparent, and helpful stories that you can relate to and inspires you to take control of your finances and only have debt that brings you closer to financial freedom. Everything on this podcast is general in nature and for education purposes only. None of your personal objectives, financial situation, or needs has been taken into consideration. I highly recommend you seek personal, financial, legal, taxation, and credit advice before you take any action on what has been heard on this podcast. Welcome to episode 7 of the Debt to Financial Freedom podcast. I am your host, Victor Lagos. I am also the founder of Lagos Financial, a mortgage broking business. Today, I have a guest with the same name as me. His name is Victor Idoko. He is the founder and a financial planner for CFV Services. Before I get into the intro, Victor, I just want to ask, what does CFV stand for?
Oh, good question. CFV stands for Creating Financial Value.
Creating Financial Value. Oh, awesome. I like that. So, quick intro. So, Victor has been analyzing investments since 2009 and joined the wealth management industry in 2015. He has immersed himself in a lot of technical aspects and prides himself on the ability to communicate this to his clients in simple language while ensuring quality of advice. His clients benefit most from his knowledge, dedication, and guided approach in helping them achieve their needs and desires in the most sensible and realistic way. That's a pretty good sum.
Oh, I think you made it sound a lot better.
No, I like that. No, I do. We met not even a year ago, but I think we clicked straight away. And it wasn't just because of our name. No, it's because I think we both have a passion for really helping people understand money, how to manage it, how to, improve their cash flow, how to think more about their future, right? Give to their future self, right? But I want to ask you, for the listeners who don't know what a financial planner or a financial advisor is or does, could you give us an overview?
Yes, sure. So a financial advisor in layman terms just helps people plan their finances, okay? And the planning around those finances is to help them achieve a certain goal, okay? That planning can start at the beginning of your cash flow, where we actually want to see what comes in, what goes out, how you can manage that properly. And then, the next step from that, depending on your life stage, is investing, making sure you're putting money away for the long-term goals, some things you won't even think about in the short term. And, then we move on to things like superannuation accounts, helping you structure that properly, making sure you're not taking too much risk, depending on your comfort level and tolerance level to that. And then we talk about retirement, okay? The, best part of our lives, when you have to do nothing. And we also talk about protection as well. So, protecting your human capital, protecting your loved ones to leave something if something unfortunate was to happen. So we help with all those. So I think just going back to layman terms, we help people plan their finances to achieve their goals and objectives.
So why do you use the term planner versus advisor? Is there a difference?
There isn't actually a difference as far as I know. I should actually know this off the top of my head, right? But no, there isn't a difference. I think it's, one of those things where, you can advise or you can plan. It really comes down to, how clients see that, but there isn't a difference.
Okay, so it's the same. So you mentioned a lot of different services that you offer. It sounds like a pretty holistic approach that you provide. But the one part that really resonates is the protection piece, because a lot of my listeners are building their wealth through property, and they don't realize that they're not protected or they're not reviewing certain things. And what we mean by protection is insurances, right?
Correct.
So life insurance, income protection insurance, and something called TPD, which is total
and permanent disability. Yes. There you go. You should be a financial planner.
There you go. Well, or an insurance broker.
Yes.
Because there are some financial planners that only do insurances and they don't do investments.
Yes.
And that's because that in itself is a hard thing to manage when you're dealing with a lot of insurances, right? Would you say it's just a lot to do? Because it sounds like you're juggling a lot of things at the same time.
Yeah, very good question. I think it comes down to a few things. For one, the planner, and two, the client. So the planner may only want to deal with personal protection. Okay, so they might not like dealing with the investments, because that in itself is a specialty. Like, even before I knew about planning, I already loved investments and I loved analyzing and looking at all those. So not every planner has the skill set or even wants to develop the skill set to actually give advice in terms of the funds management. And some people just have a passion for it, like the planners that got into financial planning because something tragic happened in the family and there was protection in place to help them, or there was no protection in place to help them. So they're like, well, they don't want people to go through this. So they will actually develop a career in that. So that's why they specialize in that. I generally prefer the holistic approach because I want to sit down with someone and I want to say, well, I can help you with this, because I have the specialty for that within financial planning. So I definitely like the holistic approach. And I want to be able to help my clients through different life stages. Speaking to a 25-year-old who wants to work on your cash flow, all the way to someone in the 70s who's planning to save some funds for their grandkids. So all that
generational wealth,
wealth, all that, you need different skill sets, which I want to help a certain amount of clients through that.
Yeah, no, I like that. Yeah, that's really good. So you mentioned that sometimes a planner will have a certain experience in their life, so they're going to focus on one aspect. But I wanted to ask if you can share your personal story,
yes,
why you became a financial planner, and why you think this is your calling.
Yes. So I always tell people that as soon as I was born, I wanted to be a financial planner. Yeah, but that's a joke because it's not true. So what really happened was I've always liked investing. I think my very first memory, and I like telling my clients this because do not underestimate what you do and how you can help your kids. My first memory in terms of advice was when my dad was opening checks, literally back then. And he was actually getting me to open checks. And he was like, open this for me. And then I'll open it, I'll be like, oh, it's 20 naira, which is, a few cents. And that was my first exposure to investing. Okay, but it was an unconscious exposure because at that point in time, when I was 5-6 years old, I was just helping my dad open checks. And all of a sudden, I got to understand you can put your money somewhere and it can grow for you and it can do good things. And since then, I've always been curious about investing, how that can work. Okay, and that's how I then found investing. And then after that, I wanted to help people with investing, but I didn't know how. So I think in my early career, just under 10 years ago, I joined the bank and I was working in the bank and I was trying to find out, okay, what do I do next? What's the next stage in my life? And the lender in the bank then said I should go speak to a financial planner. I was like, no, I don't want to speak to them. They only talk about protection, insurance. And he was like, no, I'll just have a chat with him. And I sat down with this gentleman back in Perth and we had a chat and he explained what a financial planner does. Going back to what I've said from that holistic approach. He's like, well, you do the cash flow, you do the investments, you do retirement, and you do protection. I was like, well, can I not do protection? And then he explained the essence of protection to me. I was like, oh, okay, makes sense. And then that's how I actually got into financial planning. That's the kind of entry. So I started as a associate advisor. I was able to get a job. And after that, when I started giving clients advice, I actually loved it, because I was like, well, I can actually make a huge difference to these people's lives by, just even helping them direct where to put the money, as simple as that. So that's how I got into financial planning.
Okay, that makes sense. And how long?
It's a long story.
How long ago did you start CFV Services?
CFV Services actually established the company about 5-7 years ago, but fully financial planning 2 years ago after I left the bank. Yes.
Oh, okay. So it was sort of like a side hustle.
Yes.
Okay. So look, the name of the podcast is Debt to Financial Freedom. But I want to ask you, what does financial freedom mean to you?
Yeah, very, very good question. And I guess to me personally, it's being able to get up and not worry about my finances, not worry about how, myself or my partner can live the next few months or the next few years. Not have any more money worries and, be able to provide what we need to provide for, the next generation um, who will then come into our lives and just be able to provide for ourselves as well. So, a classic example is, let's assume I didn't want to run my business again. Financial freedom to me will be able to get up, close down the business, if at all, and not worry about money for 6 months. That's just me. Okay. But I do love CFV Services, so I'm still going to run it.
So being able to just have 6 months, not do anything, but still have enough income to live off of. That's sort of the
Yeah.
idea.
So if I was to put numbers to it, yes, 6 months. However, I think it's more the ability and just having that peace of mind. I think we generally underestimate peace of mind. Peace of mind, say, well, I don't have to do this job. I'm doing it because I like it. And if something dynamic changes within where I work, I have the ability to move to another job, be it in 1 to 6 months, and not worry about how I can take care of myself and my family.
Yeah. So it's like when you've got money put aside that covers all your costs, you can start to, think clearer. You can do decisions that sort of serve you, that serve your customers, because you're not thinking about, I need to survive, right?
Correct,
Yeah.
correct. I think if we go back to that hierarchy, going past that survival to more, okay, how can I make a difference, and how can I continue to do that given the circumstances that come my way, because things happen, and it's just having that ability, peace of mind. For me, is having the right structures in place for my business, for myself, for my protection. All that gives me that peace of mind, and that is financial freedom to me.
Yep. Okay. So you mentioned the hierarchy, so the listeners know it. I think it's called Maslow's hierarchy of needs. That the one? Yeah. So if you want to research that to learn a little bit more, it gets you to understand, a framework of how we think and feel about survival and obviously going up the the pyramid to where we thrive, basically. Um, Something I do know about is that there were some changes, education standards for financial planning a few years ago, but I don't really understand what those changes were, why they were introduced, and what that's actually meant for the industry and for consumers overall. Can you explain that a little bit?
Yeah, sure. So a few of the changes that happened is we actually got increased compliance regulations, rather the regulators increased the compliance we need as financial planners. That's one. The other one was around education as well. They wanted to make sure we can pass a certain exam to be known as a financial planner and be officially qualified. And then we have educational requirements that kick in a few years. So all planners in the next few years need to have a certain level of qualifications, a bachelor's degree, at least in financial planning or something very related. So why that came in was due to the Royal Commission, which came up a while ago, and they really wanted to strengthen the industry, and actually protect mom and dads as much as they can, and also ensure that people getting into financial planning have the necessary skills to help people achieve the goals and objectives. Because if you think about it, a lot revolves around finances. Not many people may fully understand or appreciate that, but a lot of life just revolves around finances.
Yeah. Okay, that makes sense. Because I did have a buyer's agent on in a last episode. His name is Alex Minter, and we were really just talking about regulation around property investment, because that's a big financial decision that people make, and many Australians want to actually, grow their property portfolio. But then you've got these people that sell property that present to be experts, and they call themselves, a property strategist, or what I'm talking about, right? And so there's no education requirements, there's no disclosure requirements. It's not regulated at all, yet they're giving basically financial advice when it comes to property, because they're trying to help people generate wealth through property, but they're getting paid by a developer or a builder, and many times they're not disclosing how much they earn. So what's your view on that? Are you aware that that happens in the industry?
Yeah, so I am aware that happens, and I always encourage my clients to go to a specialist, but know the specialist you're going to. I definitely value the professionalism a buyer's agent can bring, a broker can bring, an accountant can bring, a financial planner can bring. And people sometimes do not actually look at the specific differences as to what these people can do. Okay. So if a client comes to me and wants tax advice, I'm like, well, I'm not an accountant. Yes, we may be able to give you incidental tax advice. So the same goes for, property. Okay. So yes, you might be seeing a specialist just to ensure they are actually allowed to give you a certain kind of advice. And generally, you should have a dream team. When I say dream team, you should have your broker, you should have your financial planner, you should have your accountant who can all work together to ensure you're hitting your goals and objectives. So property is a very interesting space. We could have a whole series of podcasts just on, properties and the specialists that can help you there.
Well, I wanted to ask you about that because as many of my listeners and my clients are property investors, and some of them don't think to invest in shares, managed funds, or other investment classes. They just want property. They may think they don't need a financial planner, but as they grow their wealth, they obviously need to protect it, right, with the right insurance. So we talked about, what insurance is sort of high level, but how can they actually help people? And many of my clients will say, I already have, my life insurance and stuff in my super. So can you sort of help a little bit help other people understand like what is the insurance they have and should they be reviewing that if they're growing their portfolio?
Yes, so good question. And yeah, I'll talk about two things there. One, protection is very important because it protects different things. And I'll just zone in on income protection. Okay, income protection protects you from injury, or rather protects your income from injury or illness. So if you're unable to work due to injury or illness, you get a certain amount paid to you by an insurer. Okay, and that's very important because as we go through life stages and think about the early life stage, the late life stage, you transfer lots of your human capital into physical capital. So literally you're working, you're earning, you're saving, and then you're building on that. So if something happens to you in the early stage of life, you haven't had enough time to transfer the human capital, your ability to work, to financial capital. So that is a very key thing that people need to protect. Because I know personally, and I know for most people, the one thing that would stop you from getting out of bed to work is injury or illness. Everything else you might be able to work through. So that's what property investors need. You still need to pay down your mortgage. You still need to build some wealth over time. And protection helps you not go backwards if something was to happen along the way for a short time or for a long time, touch wood, and by God's grace, not. So that's one aspect about protection. I think the other aspect as well is people feel they might have enough cover in the super, or they might have enough cover because an employer has provided it to them. Some big employers do that. However, this employer hasn't sat down with you to know what you want in the next 2, 5, 20 years. So they're giving you default covers. A good analogy I like using is think about a 6'5" person using a kid's umbrella in a storm. It's not going to work. Okay, so that's the way to think about all the other insurances or protections you might have, and you haven't actually seen a professional to actually put it in place. But it's not elaborate enough. It doesn't give you the necessary cover. It might not even work. Going back to the umbrella case is why you might be holding it. The storm is coming. You might not be able to open it.
Yeah.
So yeah, those are the two aspects I'll really get people to think about. Very important.
Before you touch on the other insurances, I wanted to ask about your own occupation or any occupation. So a lot of people don't know about this, but some of your insurance covers might be for any occupation, which you can elaborate on this, but it basically means that if you're unable to work, but you can, in your particular profession, but you can work in any other job, they can basically say, well, you're not covered. But if you're covered for your own occupation, especially if you're a high income earner, then if you can't do that role because of a certain injury or illness, then you are covered. Is that basically what I mean?
Yeah, correct. So I'll just add a few points to that. And I like giving some analogies that, many people can understand. So think about a surgeon. A surgeon, you need to open someone up. You need to go in and fix whatever is not right in there. So if for some reason you have bad fingers, for some reason, you've broken them, or you have a degenerative disease or whatever, and you can't do that, you still have the mental ability, but you can't actually go up and open someone and do what you have to do. So for own occupation, if that surgeon had the right insurances in place, they will get a payout. Say, well, they can't be a surgeon again by opening people up, but they can actually do research work, or they can coach other surgeons to be, as good as they are, or help them be qualified. So from an own occupation perspective, that surgeon will get a payout if something happens to the fingers.
While they could still work and
they could still work,
coach others to be surgeons.
While as for any occupation, if their cover was just an any occupation, they will not get cover because, I'll change that. They will not get a payout. Okay, so they will still get cover, and that's where we advisors make sure we're covering the right person with the right terms. So they will get cover, but they won't get a payout. So that means if something happens to the fingers and they couldn't actually perform surgery and so on, the insurer will say, well, you're not covered for your own occupation, you're covered for any occupation, so you can still go work and do something else.
So what will they pay them then?
They will not get a payout because they can still go find another job because their mental ability, using the surgeon's example.
So say a surgeon is earning $500,000 a year, and that instance they're not covered for their own occupation. They could put the claim in, they'll say, sorry, you're not covered, so they get nothing. And then they go and get a job for 80 grand a year or 60 grand a year.
Correct. They need to go be, I don't know, just pull something out there. They need to go lecture.
Yeah.
Other surgeons, something like that. So it's very key because, I always tell my clients, this insurance is, or rather protection is, the event happening to you is a possibility, right? But if it happens to you, that's 100% already because it's happened to you. So yes, you might say, well, it only happens to 3 out of 10. But if you're one of those three, that's 100% chance. So you should not actually take that lightly.
Well, it seems like a no-brainer because say you are a high-income earner like a surgeon or some other professional, then you're most likely you've got financial commitments at that higher level of income. So if you weren't covered and you weren't able to earn that level of income anymore, but you still had to make repayments on all your debts and your property portfolio, then how do you do it, right? If it's negatively geared or whatnot, you have to cover the costs. Then either you have to sell down your assets and slow down your wealth journey, and you may never ever get to the same point because your income may not reach those same levels. And the insurances within super, do they ever cover own occupation? Can you call the insurer with the super and say, I want to change that?
So what the best way to actually look at that is to go to the comprehensive providers and actually be covered. Okay, one of the things that many people would not know as well, the comprehensive providers are actually the same providers that give you protection within your super, but the terms are different. Okay, so that's very important. So for example, if you're looking to get some comprehensive cover, I would encourage you to sit down with a professional to actually look at that for you. Because to answer your question, you can have that through your super, but it depends on how it's structured. One of the things I always encourage people and tell them that the structuring is very important. So it depends on how it's structured, and then you should be able to have own occupation.
Are you able to do insurance reviews for people within their super, make changes on their behalf within their super fund? Is that something you do something?
Correct. So that's something we do, and that's the whole planning for the person's goals and objectives to be met. So we can help them with that. We can guide them because it's not something, you look at every day. So these actually have lots of regulations and, terms, and the companies actually change the structures on a consistent basis. So it's good to
you stay on top of it, and that's what you do day in, day out. So it makes sense that you'll be able to, you recognize most policies. You'll know, the underwriter, you know whether they can change it, restructure it, or switch altogether. Yeah, it makes sense actually. So for the people out there who think that, because some people think that not everyone needs a financial planner, would you agree, or do you think everyone would need them?
Yeah, so that's a very interesting question, right? Because people can go through life without the financial planner. So I might just change a word there. So the word is want. I think everyone wants a financial planner. And when I say want, you should consider one. Do you need one? Not really. Not everyone needs one. So just certain people that definitely need one because you're going through certain things in life where they cannot actually plan anything around your finances. But I'll say everyone wants one because we can help you take things to another level just because we have the right strategies and structures in place to actually guide you on that. So I'll call it a want. Everyone wants a financial planner.
So some people don't even know they want one, but maybe after listening to this, they'll realize I do want a financial planner, and they have to obviously weigh up the cost versus the benefit and whatnot, right?
Yeah. So and you raise a good point there because part of the regulations, or rather, part of the changes that have come through has made financial planning more of a profession these days. You need to go through certain amounts of training. You need to cover a few hurdles to become a planner. So most planners, when you sit down with them, they will tell you when you do not need one, or if you need one, or if it's not cost beneficial for you. I always tell my clients that, look, if it's not value for money, I will tell you, because I don't want to put you in a position where you're worse off when you actually came to see me. So in terms of value for money or cost, generally we'll let you know, okay, this is cost beneficial, okay, or let's start with this and then get to that over time, because you need to save more before you can actually invest. So along those lines, so cost benefit will be definitely discussed.
Okay, no, I like that. So it's like, even though yes, you get paid a fee for your service to prepare, a statement of advice, and then of course there's probably insurances and whatnot you get paid on, but you will look at the customers, because you're, not just because it's ethical, but because you're bound by regulation that says you need to actually show what's the cost benefit for this particular insurance, this particular wealth planning. And if it doesn't make sense financially to them, then you can't advise on it and say you should take this product just because you get paid.
Correct. So yeah, there is that definitely cost benefit analysis, and I think that's one of the reasons I'm very happy with the changes, and one of the reasons I actually decided, okay, look, changes are coming in. I love the changes. Let me start my own business.
And I remember you mentioned once the amount of education that you've undertaken as well, because with the changes and more planners needing to have a certain standard, bachelor's you mentioned, you've already got that under your belt, right?
Yes, I always tell my clients sometimes that I have studied a little bit too much, which is good. Look, I do love the technical aspect. I think I'm blessed because I can relate to most people, while as the technical aspect is something that never ends, and it's a good thing for me to actually keep on top of that. So I genuinely love studying, and I won't stop, unfortunately, or fortunately, however you want to look at it.
Well, that's how you stay a master of your craft, right? Just keep learning, keep growing, and helping others what you learn. Teach others what you learn. So, my other question about insurance, while we're still on the topic, was, what about the insurance that banks offer to their customers? I know I get an email sometimes from my bank saying, "Oh, partner with AIA or whatnot." Is that general insurance, or is it still fully underwritten, the same what you can provide?
Yeah, so those kind of insurances are actually not underwritten, and I put a general term out there because it depends on the contract, right? So most of the ones provided by the banks called the loan protection cover, so they're not really comprehensive in the fact that comparing the loan insurance cover to something like income protection, the loan insurance protection or cover only covers your mortgage. Okay, while as most people will not be spending 100% of their income on your mortgages. So going back to the umbrella analogy as well, it's a small umbrella compared to what you should be covering. And sometimes, because it's not underwritten, it's actually at a higher cost. Okay, because now you're taking the risk of everyone else, even though everyone's health is different. Because that's how underwriting and that's how pricing of protection works. The higher risk you add to the company, the higher premiums you potentially pay. So the ones that are not underwritten and provided by the banks generally are more expensive.
Unless, of course, you're someone that is high risk, then it could be cheaper.
Correct. Yeah. So I always put it in terms of priority for clients. So for example, we want underwritten cover, but sometimes if we cannot get underwritten cover, we might look at other options for you.
Okay. Yeah, that makes sense. And just so the listeners know, I do have income protection, life insurance, and TPD.
We can be very good friends now.
Yes, we already are. What do you mean? We're both victors.
There's always room for improvement.
Yeah, that's true. Okay. So my next question would be around people who want to use their super to invest in, say they want to invest in residential or commercial property. Would they need a self-managed super fund or an SMSF to do this? And what should they consider before going down this path?
Yeah, so generally people that want to invest in direct property, so on that property actually directly, yes, they'll need to set up some form of a self-managed super fund to accomplish this goal. Okay, I think what they really need to consider a few things is like, one, do they really need one? Because yes, I know lots of people love investing in property, and I'm very pro property with my clients. I love it when they do it. Life stage really matters. If you're 2 years away from retirement, just throwing that out there, it might not be the best for you to then buy a property and then, look at paying down that mortgage within 2 years. Fairly hard to do. So life stage really matters. And in terms of setting up an SMSF as well, one of the key things is the operational aspect of the SMSF. You as the trustee are now liable for lots of the operational aspects of the SMSF. So that's something I'll get client viewers out there to really consider. You need to be able to, one, want to do lots of those operational aspects, or want to learn how to do it. Because if you're someone that, you don't want to deal about finances, you just want to look at it once a year, and an SMSF might not be ideal for you. And SMSF is so complex. I can go on about a few other things, but look, liquidity as well is a very key aspect in terms of setting up an SMSF.
Liquidity meaning how much cash or accessible money they can access without having to sell down. Yep. Yeah, and it's not cheap to set up an SMSF, is it? It's a few thousand.
No, it's not cheap to set up an SMSF. Look, generally you need an advisor, an accountant, and an SMSF auditor to help you with a few things in terms of the running and the operational aspect as well. So it's not cheap. So there's that cost effectiveness as well, which we always look at for clients.
Okay, so if someone did want to buy a property, you could sit down with them and say, all right, if you did buy a property with an SMSF, and we look at all these costs, versus if you set up an industry fund or a retail fund or a wrap account or something like that, you'd compare and say which one is actually going to pay you more over the long term and which one's going to cost you less.
Yes, so we will do that. I think one of the things we really do that I'm really happy about is we try to give lots of our clients perspective if they don't have a clear idea of what they want as a goal of an objective for the next 10, 20 years. Because financial planning is really planning for the future. It's not looking at the retrospective aspect of lives. So we do modeling. So we can model, okay, you get an SMSF, you buy a property in there. What does that look like 10 years? You go to a normal master trust account. You have a certain level of investment in there. You make contributions. What does that look like after 10 years? You go into a wrap account where you have a little bit more tailoring. What does that look like after 10 years? And, present that to the client saying, okay, look, you have these options. Do you want A, B, or C, or D? Okay. And then they can actually get perspective as to, okay, what they need. And look, funny enough, some of my clients will model this out and they're like, Victor, I actually don't need that much money. So, okay, how about I spend more than I'm saving now? And, these are clients that are saving a lot. So that perspective is key for people that don't have a set goal and objective they want to have in 10, 20 years time.
Sounds like a pretty good place to be when they say I need to spend more because I save too much. I think a lot of my listeners on the other side of that.
True. So look, I'll say about 2% of my clients actually get to that point, or they come to me and we model that and they're like, well, okay, no, I don't want to save this amount because I'm happy as to where I can be in 10, 20 years.
Yeah, no, I like that. I mean, one of the things I was going to ask you, and you started touching on it with the examples, but can you give us a couple examples of clients that you've helped with, setting up the right insurances or possibly investments, and then also help them with claims, because that obviously has an impact, and I want to know what sort of impact that had on their lives.
Correct. They always say you never forget your first claim. So this was my first claim client that I dealt with. She came, this was back when I was in the bank. Okay, she came to me, I'll just throw out numbers, a few years ago, and she wanted to reduce her personal protection covers. So we did something called an insurance needs analysis, because it depends on what individuals need. Again, after I ran that, I was like, unfortunately, you actually need more insurance. She's like, Victor, I came to reduce my cover and potentially cancel what you're telling me I need more insurance. I explained it. We went through the insurance needs analysis, which is a rational approach to, okay, why do you need X amount of cover? And she was like, okay, makes sense. That's fine. And then we put that cover in, or rather we increased the cover she had. About a year after that, she had breast cancer. Okay. And she called me. She was like, Victor, I have breast cancer. What do we do? And I was like, okay, leave that with me. Let me get back to you. Just focus on your health for the next few days and I'll give you a call. So I went back to all the insurances we put in and found out what she could claim on. Okay, so we then put the forms together. Unfortunately, back then, you needed the clients to come in to physically sign. Okay, so she came in, but she came in with her, I forgot the name. Obviously, I'm not a medical professional, because she just had, there was a medical device that was helping circulate blood. Yeah. So she came in with that, and we signed the forms and everything. So it was quite emotional for me, because that was my first client that I helped increase cover and helping claim. So we then sent that to the insurance providers, and he came out saying, yes, we're happy to pay her, and they paid her out. So she got $165,000 in trauma, because that's a traumatic event. And then she also got about 65% of her salary paid out to her for as long as she couldn't go to work. So a single mom with a kid of about, I think the kid was 7 years of age then, that was a lot. So, and obviously I stayed in touch with her throughout the whole process, and she used that money to ensure, the kid had a full-time babysitter while she recovered, because she had to go through chemotherapy and all that, which, if you think about it, or if people can imagine this, you cannot do anything. You cannot take care of your kid. So she was really pleased because she could use the money to, pay for the kids, a babysitter, take care of the kids, put food on the table, and not worry about, that financial aspect of things. So that was actually my very first case, which obviously I'll never forget. So, and I always tell clients that, look, I see this firsthand every time. I know I may be speaking to new clients across the table and say, well, you should consider doing this, put that in. And, some might not see the value, but it's like, look, I see this, I'll walk you through, touch with, hopefully not by God's grace, if it happens, but it does happen. And, you will get
more common than not.
Yeah.
And if she had reduced her cover, which was her original plan, would that mean that she wouldn't have got 165? Would it have been much less or nothing?
Yeah. So when she came in, I think it was about $100,000 she was covered for the traumatic side. Okay. So we increased that because it was based on, getting someone to take care of the kid for 1 year, having that help. Also covering about 30% of a salary, because usually with income protection, you don't get the whole 100%.
So you pick up that difference.
So those are the kind of things we'll discuss with them and then put that in as well. And obviously factoring that she didn't have help. It was just her. Okay. And she didn't have any partner to support her through all that. So if we didn't increase that, she wouldn't have gotten the full amount. Or, if I didn't go through the needs analysis and say, okay, well, she wants to cancel it, let's just cancel it, she would have not had any cover at all, which would have been very bad, because funny enough, those clients still come back. They'll still give me a call if anything happens, saying, oh, well, Victor, I know I didn't take insurance, but what can I do now that this has happened? And definitely not a nice conversation I want to have any time of the day.
Yeah, and I think that's nice that when someone works with you, you become their advisor for life, basically. And no matter what stage of life they're at, if something does happen, they can count on you to help them through that with the claims. Like, rather than just set it up and, you're calling a call center to help me with the claim. And obviously they will probably read some little fine print and say, sorry, you're not eligible, but you will go through that and actually help them get it through. So
yeah. So, and I think that's one of the things that I was very happy about, that we can perform as a service to our clients, because it is very important. At that point in time, very few people can actually make strong, quick, rational decisions if you're going through a traumatic event like that. You need someone to guide you. You need someone that knows you. You don't need to be explaining yourself to someone. Okay, oh, well, I put this out, I took that out. What's going on? What do I do? You need someone that already knows you and can help you through that.
Mm. And you mentioned that 65% of her income was paid, and
Correct.
obviously by having that extra cash meant that she could, take as long as she needed to heal, however long that could be. But knock on wood, if she did pass away after that, she would have had life cover as well, right?
Correct. So generally, we help clients with 4 types of personal insurance covers. So there's the life insurance cover, which is paid to your beneficiaries if you're to pass away. There's the total and permanent disability. So that is if you suffer from something that you actually can't come back from. Things like loss of hearing, loss of sight. And then there's the traumatic events, cancer, heart attack, stroke, and then there's the income protection. So we made sure, or rather I made sure she had all 4 and all the amounts she needed.
And it's always a just in case. Like you obviously don't want to be on that statistic where you're the one that does get cancer, but it's a just in case, right? So in this instance, she was one that unfortunately did get it, but because she had the right covers, it didn't put on extra strain for her family or her household, right? Because she had that income, so then she could focus on healing.
Correct. Yeah.
Right.
And I think just to add on that, one thing and this is going back to your really first question about holistic advice. This is why I love holistic advice, because I help my clients with personal protection, and I tell them that I hope we can cancel all these in about 15 years' time because we've built enough wealth. Because if you have enough money in the bank, like if she had, a few $100,000 in the bank, she will not need protection because you're self-insured. So this is why I actually love that self-protection part as well, or the holistic advice I can give people, because it's like, yep, we'll do what we have to at your life stage and what you need. And when you don't need it, you don't need it. That's it.
No, I like that. So then at one point when they don't need it because they've got all these investments that have gone up in value, that's their fallback if something did go wrong. But now your advice becomes, all right, how can we make this wealth more wealth? How do we multiply it?
Correct.
All right, it's a different conversation.
Yeah, it is. And I think I always tell my clients, and I love it when I tell them, like, I hope you never have to use this protection. And then you come to me in 15 years' time saying, Victor, I've paid all this money. I didn't use it. I'm like, yes, that's what we want. We don't want you to use it, but we still have to protect against it.
Love it. Okay, so another question I want to just ask you before we finish up is, are there any lessons that you've learned through your own financial freedom journey that if you knew earlier, you would have done differently?
Yeah. Quite a few, actually. And I think, one of them that I'll point out that it was obvious if many people didn't pick that up in the first is I never wanted to even see a financial planner early on, but I ended up becoming one because then I got to understand what they do and how they add value. So part of my lessons along the ways, you need to fully understand what someone does before you can write them off. Okay, that's one. And the other one is, error of omission versus commission. We generally will not regret the things we tried and did versus the things we never tried at all. Okay, so using that in terms of buying property, investing, you need to try that, and you just need to get the right people on board to help you. Not help you just set it up, but help you along the way. Because personally, I wish I had started lots of these things a lot earlier, in my life. But look, I'm happy I did it because now I can teach other people, to do the right things and not worry about certain aspects which I or them are worried about.
Awesome. No, and I actually agree with you about having your dream team. So this is having a trusted network of professionals that are working with you to help you achieve your financial goals, and of course to protect along the way. So Victor is part of my dream team. So if you deal with me and you're building your wealth through property, I will more than likely introduce you to Victor, and he can go in more holistically and look at where you can go and what we need to do along the way. So for the listeners that do want to connect with you, where can they find you?
Yeah, so you can shoot me an email at victor@cfvservices.com.au, or you can find us on Instagram. We have a company page, CFV Services. And I also have a professional page as well, is Victor _ wealth advisor _ CFV. But look, if you follow the company page, which will be easier to follow. We will follow you and connect with you.
And is your website CFV Services?
Correct. So website is cfvservices.com.au.
Awesome. Well, I want to thank you for coming in today. I really appreciate you taking the time out and sharing some valuable insights to our listeners. Looking forward to working with you more in the future.
Yeah, thanks a lot, Mr. Lagos.
No worries. Take care.
Thanks.
See you soon. Well, if you enjoyed that, please tune in for the next episode and follow us on our socials. See you soon.